Recently, we posted a video about how to recover your portfolio better and faster from this coronavirus stock market crash. We are going to take it to the next level in this part 2 video, presented by Holistic Investment Planners. Better and faster portfolio recovery from the coronavirus stock market crash. Here is a quick recap of part 1. In that video, we discussed how portfolio optimization enables faster recovery in detail. The whole idea was to come out of below average investment schemes and reinvest those funds in above average investment schemes. If you have not watched that video, watch it. You can use the video card in the upper right corner of your screen. Now let's begin with part 2. Part 2 deals with accelerating your portfolio recovery to the next level by implementing portfolio rebalancing. The need for portfolio rebalancing. By portfolio rebalancing, I of course mean asset allocation rebalancing. Every portfolio has an optimal asset allocation ratio calculated by considering factors like your risk tolerance, your financial goals, etc. But after every crash, your optimal asset allocation ratio crashes down, as the equity proportion crashes down because of the stock market crash. In turn, your portfolio return also comes down and takes a big hit. So how exactly does the stock market crash affect asset allocation? You can understand this better in terms of numbers with an example. We have a portfolio of 10 lakhs with 70-30 asset allocation, that is 7 lakhs in equity investments and 3 lakhs in debt investments. The image you see on the screen shows 3 different crashes, but for simplicity, I'm explaining only coronavirus crash alone. After the crash, the equity investment have come down to from 7 lakhs to 4.34 lakhs. The debt stays almost the same. The overall investment value come down to 7.34 lakhs. The loss is 2.66 lakhs. This in turn affects the asset allocation as 59% in equity and 41% in debt. The same is true for other 2 crashes too. That is, dot-com crisis asset allocation has also changed and global financial crisis asset allocation has also changed from the initial 70-30 asset allocation. Let's assume an investor with 10 lakh investment in his portfolio and has 70-30 asset allocation in equity and debt. Let's put him through 2 worst crises in Sensex history and let's see how he recovers without and with portfolio rebalancing, and we shall choose which is the right decision to take. First, we shall check recovery without asset allocation rebalancing. The image you see on the screen shows the portfolio of the investor in 2 different crashes without asset allocation rebalancing. First, we shall consider dot-com crisis. He has 10 lakh investment, 70-30 asset allocation. After the crash, the 10 lakh investment has been crashed to 6 lakh and 29,000. The asset allocation to 52 in equity and 48% in debt. On recovery, we have regained 10 lakh investment on 19 December 2003. In total, it took 45 months for complete recovery. Likewise, we have global financial crisis. The 10 lakh investments crashed to 5,73,000 on 9th March 2009. The complete recovery took place on 4th November 2010. The investor regained 10 lakhs in 34 months. So this is the status after recovery without asset allocation rebalancing. Let's see what happens recovery with asset allocation rebalancing. The image you see on the screen shows the same portfolio but with asset allocation rebalancing after the stock market crash. After the crash, in the dot-com crisis, we have 6.29 lakhs. On rebalancing, the equity exposure is increased to 4.4 lakhs and the debt investment decreased to 1.89 lakhs. On recovery, the equity recovered to 9.37 lakhs and debt to 1.89 lakhs. So, in the same 45 months, the 10 lakh investment has recovered to 11.26 lakhs. Likewise, in the global financial crisis we had after the crash, 2.73 lakhs in equity and 3 lakhs in debt. After rebalancing, the equity is increased to 4.01 lakhs and debt to 1.71 lakhs, that is to 70-30 asset allocation ratio. On recovery, the equity investment has recovered to 10.26 lakhs. Debt investment is at 1.71 lakhs. The total investment value has recovered to 11.97 lakhs. Let's compare. Recovery without asset allocation rebalancing gave back only the initial 10 lakh investments as the Sensex completely recovered. But the recovery with asset allocation rebalancing has given you an additional 1.26 lakhs profit in the dot-com crisis and almost 2 lakhs profit in the global financial crisis. So what do you think is the right choice? Recovery with asset allocation rebalancing has given you a faster recovery and additional profit in the same time frame. But it does not stop here. There is also a real bonus you must consider. That is, the recovery and the crash and the profit shown here are only Sensex. I presume you have actively managed mutual fund schemes. These mutual fund schemes perform consistently better than the Sensex and their respective index. So, on recovery, you can expect better returns than the Sensex than the respective index. But here is the real question. How much should I transfer from debt investment to equity investment to rebalance my portfolio optimally? If you have this question, you do not have to worry about it. We have created a free downloadable rebalancing tool which you can use. Let me show you a quick overview of this rebalancing tool. You see it on the screen. This is the portfolio rebalancing tool. It has 3 different sections: before the stock market crash, after the stock market crash, and rebalancing. For before the stock market crash, I am entering the value as 7 lakhs in equity and 3 lakhs in debt investment. So it automatically calculated the asset allocation as 70-30. And after the coronavirus stock market crash, my equity investment value has come down to 4,34,000. And my debt investment stays almost the same, 3 lakhs. So the coronavirus stock market crash is 38%. Based on this, the rebalancing shows how much should I transfer from debt to equity to rebalance my portfolio back to 70-30 ratio. Using this portfolio rebalancing tool is this easy. So you can download this rebalancing tool by using the link provided in the description. And finally, all you have to do is follow these simple steps to rebalance your portfolio. First, note your optimal asset allocation ratio before the stock market crash. Second, calculate the asset allocation ratio after the coronavirus stock market crash. Third, keep enough risk-free funds to ensure liquidity for your short-term goals and emergency needs. Fourth, rebalance your portfolio by either transferring your funds from debt investments to your equity investments, or you can channel all your new investments to only equity investments. Regulate this process by rebalancing 50% immediately and the rest in a staggered manner over a course of 3 to 6 months. Do not wait any longer. Rebalance your portfolio immediately. But it might feel overwhelming at some point. Do you feel stuck? How do you feel about a professional's assistance for faster portfolio recovery? Reach out to us anytime, Holistic Investment Planners. We provide free 30-minute consultation. Register for yours now. Registration link is in description. If you like this video, like and share this video with your friends. And also don't forget to subscribe to our YouTube channel.